Tesla's stock price has been through a lot lately. I thought we could have a quick review as to what's been going on. I'd like to start off though by reminding you that the stock was still trading in the 700s in only October, about 2 months ago, just to put things in perspective, and then quickly hit about 1250 in early November. The stock price was full steam ahead. The Hertz deal seemed to be some sort of catalyst that was required for further market validation on top of a record-breaking Q3 earnings report. Yes, almost all quarterly earnings are record-breaking, but this was better than the market anticipated. Like I said, I wanted to put things into perspective to acknowledge where we are and where we might be headed. And as they say, if in doubt, zoom out. If you recall, once the stock started running past the 1200s, Elon calmed the market down on Twitter, explaining that there has been no contract signed with the Hertz deal and that it made little difference to Tesla, as they can't make enough cars anyway. So that did chill the stock price somewhat, but if that wasn't enough, then Elon decided to play politics. Elon asked on Twitter if he should sell 10% of his shares to pay tax. Now we know that he did have a tax bill coming up anyway to exercise his options, and although he could have possibly borrowed money to do this, well, I'm not sure having over $10 billion of debt is nice for anyone, at least when you don't have any income being generated from said debt. It's different with property or with stocks that offer dividends perhaps. So Elon basically had to sell some stock either way. But why not try and make the most of it at the same time? Start a poll on Twitter, of which I would guess he was fairly certain what the end result would be. This way, he got to look like a hero doing what people decided and paying his taxes. Not only that, he got to demonstrate how taxing unrealized gains costs significantly more than the tax it generates, i.e. wiping something like $250 billion off Tesla's stock price and essentially a lot of people's retirement accounts in order to pay only $5 billion in tax. Yes, just $5 billion, because we're only accounting for the tax from the capital gains from the sale. The tax from exercising the options is nothing to do with the sale in this scenario. And then the government only end up spending about 30 cents on the dollar of what they receive, which means $1.5 billion will go to the intended government cause, at a cost of around $250 billion. Hence, why you shouldn't tax unrealized gains. But not only that, we can't even assume said $1.5 billion will actually even do any good, as like Elon recently said, government have proven themselves to be terrible at asset allocation when compared to successful businesses that have literally demonstrated great asset allocation, hence the success of the business. At the end of this, Elon will also have about $10 billion or so left over, which he must have earmarked for something. Some people think he will inject some more funds into SpaceX. Personally, I don't think that's necessary. SpaceX can likely raise $20 billion whenever they want, simply by floating Starlink. There was talk of helping world hunger, but that's not as simple as people just think. And then the one I think which is most likely, the Texas Institute of Technology and Science, where Elon can create even more vertical integration for Tesla by educating his own engineers specifically for Tesla and SpaceX. At the time of this video, I think Elon is approaching not far off 3/4 of his Tesla stock sale, whilst also exercising options that are further adding to his position more than he is selling. Once finished, Elon will likely have a few million more shares than he started with. Oh, and $10 billion. Therefore, one way you could look at it as just one big payday for him. It must be nice for him to finally have some money. Sure, he's had enough for mansions and things, but some serious cash that he can really do something with. I look forward to the same. I'm getting a bit tired of never having any money, as I have such an expensive addiction, buying Tesla shares. But I think this might be coming to an end, but I've also said that several times before. It's just so addictive, especially when it dips. Oh well, we'll have to see. Alright, so this is really bad news for the stock price, hearing 2% of the entire share count being sold off and it being the most influential member of the company doing it, the CEO/Techno King and founder. Yes, I refer to Elon as a founder of Tesla. It is his heart and soul that went into the company, along with something like 85% of the early capital. As we've seen, since his sell-off period, it has had a huge impact on the stock price. Just about every day Elon sells, we see the stock price get hit, possibly around a 2% drop. But when he's not selling, we do often see the stock price coming back. It has been bobbing around 1,000 to 1150 all month, with a few touches of mid 900 until people quickly realize that it's simply too low for Tesla and start buying up. There seems to be some solid resistance around that point, despite 950 being the all-time high just in late October. It really does feel like the stock price has entered a new cycle now, somewhere between 1,000 and 1,200 compared to around 650 and 750 we've been seeing throughout most part of the year. I'm also of the belief that we should hit a new cycle after all these exciting events occur later around the corner, perhaps trading between $1,200 and $1,400 at a guess. But on top of Elon talking down the Hertz deal and selling his shares, we've had a scare with Omicron, which could have generated potential liquidity issues in the market, although it looks like we might be alright on that front. But that one did give me a little scare. particularly for some people I talk to and respect heavily in the Bitcoin community who specialize more in the macro side of economics, which meant I didn't end up buying that dip. This is generally my trading strategy. Remember, I said trading. Wait for some blood in the streets and then pay attention. When it looks like a good buying opportunity, then wait for it to dip that little bit more, perhaps another 5% or so. If it was good to buy then it's great to buy now. And I may only wait for a few events like that a year. This is for trading options, mind you, which is a different game. I haven't actually ever traded shares with Tesla. I just find options that much more exciting, I suppose. Also, with options, you only really need to be right once out of 3 or 5 times, depending on the return you receive. I think my highest return was 1600% coming out of the COVID credit crunch in early 2020. I also let everyone know what I've bought in real time on Twitter, so if you want to stay up to date with my trades, it's sensible to follow me there. And now we've also heard that Evergrande defaulted on its debt. We had a reasonable dip back in August, I think it was, when they were first showing signs of weaknesses. If you recall, I did purchase some leaps on that occasion, and they've done quite well ever since. But Evergrande defaulting, this was kind of expected and somewhat baked into the market, but on that day of the announcement, Tesla did fall about 6%. Then we had this whole build up to December the 9th, which I didn't make any videos on, as I didn't expect much to happen, and it turned out just to be a lot of empty hyperbole, but did possibly affect the stock price a little. I think a lot of investors were hoping for some big news to be announced. Yes, Elon has been cryptic in the past and given hints on Twitter, but I think people went too far down the rabbit hole on this one. Anyway, despite all these events, which in my opinion were quite major, we're still holding up above $1,000 and often back to above $1,100. I believe the stock is showing a lot of resilience here. I think this is a really good sign. Despite how volatile it's been lately, well, it's been acting this way for good reason. In reality, I would say this feels quite solid, but you have to face the fact that this is a high growth stock still. Despite it already being valued around $1 trillion, we've barely gotten started, and growth stocks do have volatility. It takes a long time to ramp batteries, as everyone else is slowly discovering. It is an exponential process. But not only that, we have lots of exponentials in play with Tesla that the other EV companies simply don't have going for them, such as the ability to ramp up battery production at such a faster rate than everyone else. Vehicles that will likely soon take 1/4 of the time on the production line compared to the competition. We're still at the start of the growth. If you're a true hodler, then get over the fact we're down 20% or so from our all-time high. It's short-sightedness. Either you believe in this company and leader or you don't. At today's stock price, I think we're at the equivalent of a PE ratio of around 100 relative to what Q4 earnings might be, and we aren't even at 5% of the vehicle production rate we expect later this decade, 20 times more to come. And with economies of scale, it likely means a lot more than 20 times the profits. Not to mention energy poised to be just as big. And this doesn't factor in the AI, i.e. robotaxis and autobidder, so that's potentially perhaps 100 times the profits later this decade. And we're definitely not factoring humanoid robots into that. But look, these are not smartphones. It takes a really long time to make this many batteries. We're talking the difference of 10 watt hours in a phone compared to 60 kilowatt hours in an EV. Do you understand? That is 6,000 times the battery size. This is why it takes so long. This is why there'll be no one else catching Tesla up. This is why Tesla can raise their prices and demand still increases. But we're not robots. We are human and we still have emotions and like to see the stock price keep rising. Well, luckily for everyone, there are still a few events around the corner. We have the Hertz order, semi-truck launching, 4680 batteries in vehicles, Berlin and Texas opening, Q4 deliveries and earnings, Elon on the earnings call outlining the roadmap for Tesla, the EV rebate, and who knows, maybe even a potential split. And this is just all within the next couple of months. And Tesla aren't dropping everything they're doing after that either. It is continually all hands on deck. But in the excitement of all this, it may be possible for the stock to bump to as high as 1,500 perhaps. I'm not saying it will stay there, I'm just saying it's possible it might hit that. And I put my money where my mouth is. But I would hope we see a new high sometime then. And it may settle back to 1,200 or 1,300, which is still a great place to be. Oh, and also, Elon will soon stop selling off his shares too. Of course, we have to hope for no major negative macro news either. Look, I'll just say it. We've been very spoiled, especially those of you who've seen 20 times or 100 times returns already. We have to remember, even a 50% return in a year is outstanding. Sometimes we need to get realistic, and I know we have some big hopes for 2025 or 2026, but even a $3,000 stock price then is a fantastic return too. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.